Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me live at MarketSite is Kinahan. He's the Chief Market Strategist over at TD Ameritrade, as always. It's great having you on set with me.
Always great to be here.
All right, let's review the IMX. Retail investors, 9 straight months in a row. They just can't get enough of the market and buying stocks here, can they?
Well, you know, it's very interesting to me as everyone poo-poos the market. The retail client has come back. This is our second highest reading ever, up 4% month over month. Net buyers, as you mentioned, 9 months in a row. And what's really interesting to me, Jill, is, I've talked about this before. It's been a gradual trend, which makes me very happy. It hasn't been an all-in at any point. Gradually, they're increasing their exposure to the market, and they've been rewarded for doing so.
Yeah, I mean, if you take a look at the IMX chart, if we pull that up real quick, you can see it almost mirrors the S&P in the way that it has been moving, where there aren't significant pops or drops, but just that consistent buying across the board. And let's take a look at what was strong for October, and it's no surprise that techs were leading the way.
Yeah, techs were leading the way. You know, you got a stock like Micron, absolutely leading the way in terms of, even though it's hitting 52-week highs, people are still buying it. You know, Adobe System, the same thing. So very, very interesting from that point of view. What I think is interesting, second month in a row, we're seeing our clients come in on the Chinese tech stocks too. BABA, JD.com. So, you know, it's very interesting to me that people are starting to expose themselves more to the possibilities of China and the obviously amazing opportunities there. And as people start to understand those businesses a little bit more, they're willing to take a little more risk there.
Well, of course, there's more transparency as well, which is certainly going to help those stocks. But energy stocks, we were just talking earlier, oil is at 56. It's kind of breaking out of that $45 to $55 range that we've been talking about. So, of course, you're going to see names, Chevron, ExxonMobil, pick up some exposure there as well.
Well, yeah, you know, it's interesting. Our clients sold some of those names last month, actually, as we hit 55 for the first time. And I think one of the reasons that they had bought them in the past was for exactly that, waiting for oil to break out. Oil finally got to 55. It gave people some of the opportunity to sell some of those stocks. So that's very, very interesting to me that, people using it perhaps as a synthetic way to play crude oil, because not all retail clients are comfortable trading futures. So here's a way to get exposure in a different light.
We're surprised to see that some of the financials like Goldman and Wells Fargo sold off, considering that there's expectation in the market that we'll get the rate hike in December.
Well, I think that, Wells Fargo, that's actually the 4th month in a row that it's been a sell. And so maybe retail clients have had a bad, they've had some issues with
like the optics around.
Yeah, and so I think maybe some of the clients that are our clients also are just like, for some reason or other, I just don't want to own that stock long term until they figure it out. Goldman Sachs is an interesting one to me, but I think the interesting thing about it is, I won't say they're changing their business model, but they're doing things a little bit differently, and they've been open about that than they have in the past. They've also been open about the fact, although this quarter was pretty good, that in previous quarters they've had a little bit more trouble with their bread and butter businesses. Still a fantastic company, but again, maybe people just want to let that play out a little bit, take off some of the exposure there, and repurpose that money elsewhere.
Well, the big news in October, of course, last week was the tax bill that the GOP had introduced. And do you think that might stifle some selling going into the end of the year with perhaps investors? Okay, why wouldn't I wait for more favorable tax treatment until January?
I have to be honest, I thought we might see a little bit of reaction to it either way in terms of some of the businesses that maybe aren't treated as favorably as others, et cetera. So, it's not over yet. There's still a couple of rounds to go, but the initial reaction was sort of a ho-hum, which I think for the market is good. And to your point, if this continues, that might be one of those things where as we head to 2018, you might see a lot of pressure early in the year if there is a rate cut, which it looks like there may be for the individual.
Right. I mean, also going to the end of the year, well, earnings have been quite good. We're starting to see international growth all over the place. They're really, the fundamental story hasn't changed in terms of expecting selling into the end of the year, in my mind.
Well, I think it's really interesting. So many people, and on your show all the time, you have people who say, oh, the market can't keep up. Why is the market so high? Earnings drive the market.
Right.
Earnings season has been another good season. And to your point, you listen to these CEO calls, they're different than they were 9 months ago or a year ago. They're not talking about meeting expectations. They're talking about growth. They're talking about expanding business in Europe and Asia as well as in the U.S. And I thought it was really interesting, like a stock like Caterpillar, a stock like Microsoft. These are mature blue chip companies. They're acting like, were growth companies with the rates they saw. And the most important thing to me is companies that are showing that kind of growth are not talking about stealing business from competitors. Rather, they're talking about growing business. That's the most important thing to me. New clients into the market for them.
All right. Well, thank you very much for joining us, as always.
Always a pleasure, Joe.
And traders, thank you. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.